Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim the Currency Professor, and today is Friday, October 18th, 2013, ending the week of a lot of excitement and volatility. We'll get to the technicals here in a minute. Fundamentally, we had a few reports out today, mainly out of China. GDP, industrial production, and retail sales, all pretty much coming in as expected. GDP 7.8%. The only big surprise, not really a big surprise, but a surprise, was retail sales down just slightly from the estimates. 13.3% growth instead of 13.6%. So overall, not that big of a deal. Out of Canada, the CPI came out pretty much as expected. The main number 0.2%, 0.1 was expected. Core rate at 0.2, same as last month and same as expectations. Next week things will get back to normal by the U.S. government statistics. We'll actually start to see those coming through again. So we do have kind of a full docket then next week of data to come out. On Monday, existing home sales for the U.S. 5.31 million expected. Probably will not be influenced by the government shutdown because this number really reflects last month's numbers. So next month our report for existing home sales will probably be lower, so we'll have to see what expectations are and then how we actually come out. But for next week's number, 5.31 million, 5.48 was last month, so a little bit lower than last month's reading. Then on Tuesday, the U.S. unemployment report coming out that was due actually 2 weeks ago. So it will be out, or last week, it will be out on Tuesday. And non-farm payrolls expected to be 179,000. Unemployment rate staying steady at 7.3%. Next month, that number will jump because of the government shutdown, so we'll see an increase in unemployment next month for October, and then also probably some non-farm payroll numbers that'll be lower than expectations. So that will be next month though. U.S. dollar also will be affected by the Richmond Manufacturing Index on Tuesday. Expected to show zero again. It was zero last month, so without any kind of positive reinforcement there to the manufacturing sector because of the shutdown. We'll see some negative numbers there too. On Wednesday, the Bank of England releases their notes for the last meeting, showing their votes on the asset purchase facility, as well as the general comments and everything. So everything is expected to be the same there. All nine voting the same way. Then on Wednesday, also out of Canada, Bank of Canada meets. No changes there expected as well. So Wednesday could be a fairly quiet day for the week. On Thursday, we do have quite a bit. Thursday and Friday are the big days. Thursday we have a whole bunch of PMI reports coming out of Europe. No real big surprises, but all of them are expected to be above 50, so that is a positive sign for Europe. In the U.S., weekly unemployment claims really expected to see about 340,000. Now that will make it the third week in a row that we've seen escalated numbers, and that will mean that we'll probably see continued amounts of numbers also going higher here because of the government shutdown. Originally it was because of a snafu in California's calculating of numbers, and that's now translated into the government shutdown numbers. So we're going to probably see this escalated here for a couple more weeks. Then also in the U.S., new home sales, 427,000 is expected. 421 was last month. This number again will go down next month as we get people that were trying to buy homes and could not because of the government shutdown. Friday, starting out the day in Tokyo, CPI everyone will be watching to see if indeed we do get a tick up in it. The Tokyo core is expected to be up 0.4%, better than the 0.2 last month, and the national core coming in at 0.7 is expectations. Last month was 0.8, so maybe a little bit of a disappointment there on the whole country CPI number. In Europe, German IFO business climate 108.2 is the expectations. 107.7 was last month. So in the whole scope of things, Europe, the continent, looking like it is picking up a little bit for all the numbers. So we'll see how those numbers come out during next week. But we have seen better numbers over the last few weeks out of Europe. So we'll see if that continues next week. In the UK, preliminary GDP 0.8% as opposed to last quarter's 0.7. So everyone will be watching that as well. Looks good. There'll be another decent, not great, but decent growth quarter. At least it's not negative. In the U.S., durable goods orders expected to show an increase this month, pretty decent increase. Very volatile number though, so it could very easily be down next month. Got to look at that number over a 6-month period. And over 6 months it's doing okay. It's not great, but it is doing okay. Also in the U.S., the revised University of Michigan Consumer Sentiment number, expectations for 75.3. It was originally reported at 75.2 last week. And so we'll see how that actually comes out. Sentiment numbers have been hurt because of the government shutdown and the issues there, so probably will affect that as well. All right, on to the technicals. The Euro-US dollar up today about 4 pips right now. Very, very small range in comparison to yesterday. Yesterday, on Thursday, the dollar getting hammered after the U.S. government resolved their financial issues at the last hour Wednesday evening, and dollar getting hit pretty hard. So euro up, making almost new highs here. We're going to call it testing these highs right now. It does not look like it's going to continue. We'll have to see how we open Monday and trade on Monday, but right now it actually looks fairly bearish. On the weekly numbers, we are closing the week up at new highs here in this latest move, so that is a positive on the weeklies. We're right up and very close to these highs from way back here, almost at the beginning of the year, or pretty much at the beginning of the year. And on the monthlies, well, we're now halfway through the month, and it is showing some signs of better momentum, but of course we need to see how the month actually closes to make that determination. So pound dollar right now up about 5, and again same kind of scenario here. We've ran up, made highs, come back down. We jumped up now yesterday in a very, very large one-day move, and that may be all that we're going to see. Today's move here almost setting in a top. We'll see how it actually closes, but really doesn't look like it's a turnaround here. It looks more like it's a topping pattern, and we could have kind of a head and shoulders in here. So again, we're very, very vulnerable to a sell-off, and technically on the weeklies we're just testing the highs that we made 2 weeks ago, and we're doing it here on lower stochastics, so not really the bullish kind of sentiment that we should see in a move to take it to new highs. And on the monthlies right now we're still just barely negative, and again we need to see this stay up here above this trend line, close well above it again this month in order to see some continued movement up. At this point it's dubious as to whether that will actually happen. US dollar against the Swiss franc down about 4 pips on the day, or unchanged depending on your quote service. Yesterday's big move really becoming more and more looking like a test of these lows, and these lows should hold now, because we ran up on the news that there was not going to be or that there was going to be some sort of deal cut in the last hour, and it was. So yesterday's sell-off of the dollar really kind of a relief sell-off, and now we'll probably start moving back up. On the weeklies, we did set a low 2 weeks ago. that should hold. We're testing it this week. So next week it's going to be very important how we close the week out. Hopefully we close it out above this week's highs. That would be bullish longer term. And on the monthlies, we're still in a very small range for the month, so we need to see it close well above these trend lines that we've talked about for so many months. US dollar against Japanese yen down about 3 pips right now, really looking like it's more or less of a turnaround day here. Yesterday did have a sell-off as well, not quite as bad as some of the other crosses, but nonetheless dollar did sell off against it, and really looking more and more like we're going to turn around from this point. We're at kind of a technical point here where we should turn around. On the weeklies, we're outside of this triangle quite a bit, and really at the point where we could turn around from here too. Stochastics very, very mundane in there. On the monthlies, we're just extending out on a straight across trading range here at these very high levels, so the angle of ascent is becoming less steep, which is encouraging and positive. So it's just a matter of time here until we start to move up once more. The next move up should take us out considerably higher, and we'll probably, when we do move out, we'll move out at almost the same angle that we had this last move. So it's just a timing thing, a consolidation for the market here. Euro Swiss up slightly right now, or unchanged depending on your quote service, but fairly good move here. We ran down, made some new lows. We've come back up now. The next move here after this little correction here the last few days is to go up and take out these highs. So once we take those highs out, at that point then we could probably see a pretty decent run, and probably a run to new highs up around that 127, 128 level. We've been in this area now for quite a long time and done a pretty good amount of consolidation. Just a matter of time now to get this thing rolling again and see it really rally up. Euro yen up or down depending on your quote service. Very, very quiet here for most of the crosses. This has had a very nice move. We went down on a fairly slow angle on a correction, and then we've started coming back up. We need to take out these highs, close up above it, about the 135 level, and then we can see ourselves running up to that 137, 138 level that we've been seeing as the ultimate top. And if we jump out here to the monthlies, we can see it a little easier back here. So that would complete the pattern. Then we can see a little bit more of a more refined correction that may take us down to the mid 120s or even a little bit lower, and from that level then we could probably start a new move up, but again that's a long time out. US dollar against Canadian, well, we're down just about 1 or up 1 depending on your quote service. I got several here that are telling me different stories, but again very quiet as well. We did come off of our new highs here this week and did it quite aggressively. We're down below this latest little support line, so we're going to need to go back above that in the next week. But we're at an area here where we are considering a test of these lows back here. So maybe we sell off once more, get down to around the 102.50 level next week, and then we could probably see us turning around and running back up and making some new highs. And on the weeklies, well, we're finishing out the week here still in the same range that we've been at now for about 6 weeks, and really confirming the consolidation here, and that longer term we're going to see a move up. Monthly wise, small range for the month, at the bottom end of the range for the last 4 months, so longer term still looking positive. Australian dollar against the US, up again today. Now we've been up all week, showing some pretty good strength and some pretty good momentum. We are now up into that 96, 97 level that we've talked about getting up to kind of complete this this correction. So maybe a little bit further we run up to that 97, 97.50 level, and then we can see a certain amount of a turnaround on a weekly basis. Best week that we've seen in several a couple of months. So we're getting up now to the point here where we'll find some resistance. We can see in the stochastics grinding higher here, and the point at which we're topping out here on the week. We'll have to see how we do next week, but longer term here on the monthlies, we're completing this nice little corrective phase here, about a 50% correction from our sell-off. So here we are, we're getting that nice correction, and at some point here we will probably turn around. May not be this month, but certainly in the near future, as we look for a continuation down to the lower 80s here for the Australian dollar against the U.S. So that is it for this week. If you're not a member of FX Addicts, please stop on by and sign up. We do offer a 7-day free trial. We're also got some classes going on, and in 2 weeks we'll have our most famous class, our FX scalping class, and that will be available for a price of $147, and that comes with a book as well, so you're more than welcome to check that out. If you have questions, you can certainly contact us. I'm more than happy to answer questions about that class or any of the other classes for that matter. If you just want to generally chat about currencies or interest rates, by all means shoot me an email, tim@fxaddicts.com, and be more than happy to discuss anything with you. Thank you, and have a good weekend.